Alli Rani, the Director of Finance at CONCOR, joins us now to talk about that. Ma'am, thanks so much for joining us on the show. If you can just start by telling us what the market share is currently of the company versus other private players in some of the key verticals like, Mumbai, Dadri, Ahmedabad, etc. Because the concern that some of the analysts have is that the company is losing an advantage and losing some market share to the other players.
Yeah, good morning. Yes, when you talk about market share, I would concede that we have lost some market share to road. But when you're talking about other players in the rail sector, actually we have gained market share. In the last quarter, we reported 75% is what we hold in container transportation in the rail segment. We have been losing to road during the last 2 years. Probably one big factor is the drop in oil prices, and definitely that gave the road an edge over in terms of prices. Another thing that has happened, I think it could be better roads or better vehicles for road transportation. They are also gaining in speed, which was definitely a USP for rail transport earlier. So. But of course, we have, in coordination with Indian Railways, tried to increase our speed also so that we deliver these container boxes in time at the ports. So we are fighting with road. But as far as other container operators in the rail segment are concerned, I don't think there's any evidence of us losing market share.
In any case, ma'am, the total income had fallen in the last count in the third quarter by 5%. How is the fourth quarter shaping up, and maybe even a quarter later, if you can tell us something about how business might shape up next quarter as well?
Yeah, but this top line drop you saw was very specifically due to the cancellation of port congestion charges, which we had to collect during the last year. If you remember, the Indian Railways have withdrawn these charges, and so that definitely had this impact on the top line. As far as business is concerned, you know that we are very dependent on trade in both international and domestic, and we don't see any major trend difference immediately. We have devoted a lot of time in the last 3 years, and very specifically currently it's when most of our projects are in that fructification stage, preparing ourselves for a surge in trade which we expect maybe towards the end of the next financial year, with GST in place, and also maybe it's revision, some revival in exports, which I hope would happen, because a lot of factors are conducive for that, like exchange rate. So in the sense, if Indian goods get cheaper in the market, we hope exports would surge, at least start increasing. So we expect all that to happen, and the biggest worry, I think, in this entire sector is our capacity in the terminals. Of course, it is very closely dependent on the capacity of the Indian Railways also, so that, we have a little more to wait, that the fructification of the, at least of some phases of DFC may increase our capacity in the track space. But for terminals also, we have put in a lot of effort, money, time and strategy in expanding the size and content of a terminal, so that we can give some bundle of services to the customer and try to attract them away from road to rail. So that is the period we are going through. We have to notify them, we have to finish the construction, we have to market them. So I think I would say that as far as business is concerned, sure, we haven't really firmed up our outlook for the next year. But in the immediate future, I would say that there may not be any major trend differences, except probably if you talk about margins, yes, we may gain, because we have started a lot of double stacking operations. Otherwise, business, I'd say, it will continue in the present trend.
Okay, ma'am. Point taken. Thanks a lot for joining us.